Welcome back for the 10th episode of CBA's Talking Economics with the Commonwealth Bank of Australia's Chief Economist, Stephen Halmarick. Stephen, thanks for joining us.
My pleasure.
We've just seen the release of the latest CPI data from the ABS. Can you talk us through those numbers?
Well, we saw an increase in the Consumer Price Index for the March quarter of 1.4% on the quarter. That was very close to expectations. And the annual rate of inflation, the good news is the annual rate of inflation's eased from 7.8% to 7%. So 7% still way too high. It's well above the Reserve Bank's target range, which is 2 to 3%. But it's good to see the confirmation that inflation did peak at the end of 2022 and is on the way back down. On the quarter, we saw the biggest increases in prices for medical costs, tertiary education, domestic holidays and gas energy supplies. But overall, good to see a moderation in the annual rate of inflation at the start of this year.
So has that data changed your view on the direction of interest rates?
Well, we're actually holding to the view that there's one more rate hike coming from the Reserve Bank. We think that'll be in the May Reserve Bank board meeting, so first Tuesday of the month. We think that's the last rate hike in this cycle. So after pausing in April, I think the Reserve Bank will do one more, take the cash rate up to 3.85%, and we should see that in early May.
Stephen, what other factors should businesses be watching as indicators on the direction of interest rates?
Well, the Reserve Bank's made it pretty clear that the labour market is their other key focus. So the good news there is the unemployment rate was down at 3.5% in March. That's almost the lowest in 50 years. They're also watching wage costs, and also house prices. So wages costs have begun to move a little bit higher, currently around about 3.3%. We think they'll be closer to nearly 4% through the course of this year. And on house prices, there's actually signs that house prices are beginning to rise again. So the combination of all those factors leads us to the view that we think there's one more rate hike in this cycle. We should see that in early May.
Finally, the 2023-24 federal budget is just around the corner. We've got the RBA announcement next Tuesday. Yep. Following Tuesday, federal budget. Any views on what to expect?
Well, I think there that the view is a little bit mixed in that the budget deficit for this year, the financial year 2023, looks like coming in well below the government's initial estimate. The initial estimate was close to $40 billion. It could come close to almost a balanced budget for this year. Revenue growth has been quite strong given the strength of the labour market. But for next year, FY24, the budget deficit is likely to widen a bit again, probably lower than the current estimate, but around about $30 billion is what we think it might come in at. But beyond that, actually, the news is not so good. We expect to see the budget deficit move wider, given the spending on some big programs like the NDIS, aged care and defence are likely to see upward pressure on spending, which means larger deficits over the medium term.
All eyes will be fixed on that. Stephen, thank you for your time.
My pleasure. Thanks.